Yeah, so it has been difficult for Facebook recently. Obviously, you have the continued privacy concerns. Additionally, there has been some concerns in the market with Facebook core usage kind of slowing or even declining in some cases. Offsetting that, thankfully for Facebook, is Instagram, which continues to grow very rapidly, and we think Instagram is really gaining share. The question in social is this kind of a zero-sum game at this point? Consumers have so much time in the day. They're increasing Instagram usage, but to some extent at the expense of core Facebook. So I think that's what we're seeing now. We still, and obviously Facebook gave slower guidance than expected on the last quarterly call. At kind of sub 20 times earnings though, we're sticking with it here. We believe it's one of the kind of more GARPy names in the space.
Are we seeing Netflix's Achilles heel here, interest rates? Is that what it takes, or is this just a bump in the road?
Yeah, so we think, internet space obviously is growth, and we've seen that especially on the small cap side as well, where small cap names kind of at growth at an A price, and now we're seeing more growth at a reasonable price. And so the question is, did some of these names get ahead of themselves? And I think we're starting to see potentially a shift from growth back to value. If that's the case, we want to stick with names like Google, like Facebook that have reasonable valuations around 20 times earnings or below. We think these names are a little bit more defensive in the space. They'll hold up a little bit better if we do see a correction.
Aaron, I want to dig into the comment you just made a little bit more about the shift from growth to value. Given the fact that we have seen the big cap tech names, the FANG names, sell off as much as we have over the past week, big runs in these stocks this year, is this profit taking, or do you think that this could be indicative of a bigger, greater rollover and shift by investors out of these names into other parts of the market?
Yeah, so we haven't seen a big change in fundamentals yet, obviously, and I think to some extent some of our names did get ahead of themselves. If we look at small cap valuations in our space, they're trading about 30% above the 3-year average. We've been on the sidelines for a lot of these names, but they've continued to run until recently, so we have seen that correction. The bigger question is, does this get into even more of a correction from what we've seen the last couple weeks? We think we still have a little bit more downside potential in some of the small cap names. Large cap we think is a little bit more insulated given lower valuation levels. But there is a question, in terms of fundamentals, do they get affected? That's the second leg. Do higher interest rates start to impact fundamentals for these companies? And that could be a concern if we start to see housing sales slow down and the wealth effect. I think we're early to make that call, but that would be a concern maybe longer term.